Now, Mr. Softy, this stock's down 5% in the past, or about 5% in the past 5 trading days, and down even more if you consider right before earnings. And you looked at the earnings, everything was fine there. So what's going on, Mr. Softy? Same exact thing that's going on with a lot of these big tech stocks, where it's just like people are looking for reasons to take profits. This stock, Apple. If Apple has anything troubling at all in those earnings, people are going to be looking for the exit doors in regards to Apple. Now, if they come through and just everything's perfect, maybe the stock can hold strong and then maybe reach 200 after earnings. But I'm telling you, if there's just a little thing here, a little thing there, people are going to be looking to basically, where's the exit door on this Apple trade? Because this has been just another one of those kind of hot stocks, just like Microsoft has been. And you see Microsoft didn't have anything bad to report. They didn't even have any bad numbers, and yet that stock sold off from, it was above 350 going into earnings. Today's 330. A lot of these stocks are just on valuation metrics, especially when it comes to Apple and Microsoft trading at 30 plus forward PE metrics. It's just, they're in tough sledding. The worst part for Apple is they don't have the sort of revenue growth that a company like Microsoft has. And so I do think that is something to kind of take into account there, okay? Now, Tesla. Stock is down again here today, another 3%, right? We're down about $14,000 on Tesla in the public account here today. We're down to our last $386,000 worth of gains in this stock. But in all seriousness, what's going on with Tesla? Okay, well, with Tesla, you have a company here that is up 126% year to date, right? So what do we have going on? Well, we have a situation very similar to this other phenomenons going on, where people are just looking for reasons to take profits. And you look at a stock like Tesla, and a lot of people look at Tesla and they say, okay, the Fed just raised interest rates again, which means getting auto loans is going to be even harder, which means there's even more risk to the economy. The Fed's still not even considering cutting rates until 2024. So a lot of people look at a stock like Tesla and like, it's just high risk because they sell very high priced products that are bought on credit. And they're in a tough situation because by the time the Fed starts potentially cutting rates, the economy could already be in a bad situation. If the economy is in a bad situation, that hurts automakers a substantial way, which would hurt Tesla. Instead of Tesla reporting 30% revenue growth, maybe they're at 10%, right? And we know Elon is very aggressive with margins. So if the economy was to get worse in 2024 or 2025, we know what Elon's going to do. He's going to obviously drop prices, and he's going to take hits on margins in the short term, right? Which is going to be even more devastating to their competitors, but also can be very devastating to Tesla's short-term stock price. And so that's where people look out, and they're like, this just makes sense for me to take some profits here. And that's what you see playing out in a stock like Tesla. And, how long does it last? We'll see. We do know they're going to start ramping Cybertruck here likely in the next few months, okay? And we do know that usually when Tesla ramps a new vehicle, it's a hit to profitability in the short term, right? And so that is something to kind of keep in mind. The Cybertruck should be incredibly helpful to margins and profitability long term for Tesla. But that's over the next many years. If you're talking about just over the next couple quarters, Cybertruck could actually be a holdback of margins and a holdback of profitability for the company as they ramp that vehicle over the next, we can say 6 to 12 months or so. And so this is just something to kind of keep in mind with Tesla. Tesla's just not a great short-term setup. Obviously, we know what's going on for Tesla long-term is phenomenal, but for the short-term, Tesla's just in a bit of a tough spot, and there's a lot of weak hands that are just looking for reasons to take profits on Tesla. So that's kind of what we're dealing with in regards to Tesla, okay? Meta. It is the number one biggest stock in the public count, and I'm actually going to make a prediction on where I think Meta stock's going to end this year as far as the stock price goes, okay? So in regards to this quarter, very good quarter, okay? This was not the shocking part. We'll get to the shocking part in a moment, but the quarter was very good. They beat on top line. They beat on bottom line. Revenue came in at about $32 billion. That's versus $28.8 billion the same quarter last year. So basically, revenue's up over $3 billion on a year-over-year basis. We will take that, okay? Research and development was up a little bit. You kind of expect that to be there, right? As far as research and development up there, cost of revenue up a little bit. Marketing and sales actually went down. General administrative was up substantially. The number was up a little too high for my liking there. Total costs and expenses up, as you can kind of assume, right? I think profitability will definitely improve in the next 2 quarters, although it obviously is already improving. Income from operations was up about $1 billion roughly on a year-over-year basis. Net income was up over $1 billion, about $1.1 billion or so on a year-over-year basis. And obviously EPS was up quite substantially. If you're going to look at a diluted basis, which is what most folks look at, 298 versus 246 in the same quarter last year, right? So clear as day, Meta's on the right track, okay? But the next slide is much, in my opinion, even more important, okay? This is huge. Look at this. This shows you advertising revenue by geography for the quarter. And what you're going to find is every single market is growing for them, regardless of where it is. US and Canada up, about what we call about $1.3 billion year over year, right? Europe was up. This is pretty shocking because Europe is kind of seen as, one of the weaker economies right now because they've even gotten hit by inflation even harder than the States has, right? And I mean, we're talking about revenue that was up nearly $1 billion on a year-over-year basis. That's shocking, right? Asia Pacific, very nice growth there, and then rest of world growth as well, right? From about $3.1 billion to $3.6 billion. So every single geography you want to look at is growing for Meta substantially. Now, the more important thing, in my opinion, and the more important thing for the stock price, is we have a company that went from basically a company that was not just decelerating growth, but was actually starting to go down in the US and Canada in terms of revenue to now increasing, right? So if you look at Q2 2021, $13.3 billion of revenue. Last year in the same quarter, they went down to $12.7 billion. Now they just re-accelerated growth and got back on the right track, and now they just did $14.1 billion of revenue in the US and Canada. That's massive for the stock, okay? Now, I had over $500,000 right into these earnings, right? Where do I think Meta stock's going to end this year, in my personal opinion? Okay, I'm a very happy shareholder. And as far as where I think this stock is going to end the year, in my personal opinion, outside of some major market crash or something like that, if we just have a decent market, I believe the stock is going to end, and it might shock some people. I believe the stock will be $400 to $500 a share at the end of this year, outside of a market crash or something crazy like that, right? That's where I think it's ending. Even if the NASDAQ was to say flat, then the rest of this year, flat, not even go up, just flat, I think it still ends $400 to $500 a share. When I look at a company that now we're talking about is getting back into growth category numbers and the valuation's still far too cheap, I mean, my gosh, the sky's the limit here with Meta. So this is just a perfect scenario. I mean, absolutely perfect scenario. I couldn't ask for more. I couldn't ask for more from the Meta team. I am a very, very happy shareholder, and I have no plans to sell the stock anytime soon. The stock could run to 400. It could run to 500. It could run to 600, and you won't see me selling because at the end of the day, man, it's just the valuation is still too darn attractive, even at these, even if we're talking about these sorts of prices. I mean, you slap a $400 price on this stock, it's still probably only trading at a forward P of 20. Based upon what I think they're going to earn in 2024, and they're going to grow revenues 20%ish? I mean, come on, man. Like that's just a steal. It's still stealing money, even here, okay?